Morning, everybody. Start at +9 as usual, just saying hi. I'm going to switch over to the charts now, and we just want to mention for and some newer guys, I recognise some newer names there. Just let these guys give me a second. Just to say, you have a chat line, and you can unmute and interact verbally if you so require. It is a trading kind of forum, so it's very important that we interact so we can learn the practical aspects of trading. That's what this is about. Okay, so it's not actually trading, that's for the classes. This is about clarifying and practical education, as well as trading ideas, which makes precedence. So if you've got a trade idea or anything to do with trades, that comes first. But in the meantime, it's required we talk about other things and hopefully improve our knowledge. Okay, I'm going to swap over the charts now. Here's one of the trading ideas you can have a look at, but I'll go into more detail at past when we start. Okay, morning, Harald. Sure, put it up for you now and have a look. Start with that if you like, because the trades idea has gone out, should be aware of them anyway. URAUD. Quite a bit of an inverse head and shoulders there, because the bullish movement as well. Well, technically speaking, yeah. Morning. Right, sure. Try here, mate. Think about a degree colder still. Do you want to put more bad news in? Look at the weather forecast for next week. It's probably the same Pretoria, but obviously I'm in Joburg. Hey, we're talking about 0 and 1 minimums. So you think this is cold? So next week's going to be fun. A lot of thoughts in it, but what will happen is another story. Yeah, it'll wait till it gets released. A bit of a movement of the markets, but it's just basically it's a precursor to what's like that tomorrow +2, but not necessarily it follows. I've seen that good and the non-is bad and vice versa. So just wait till it's released. I wouldn't get too cute and try to outthink it. You might get lucky, you might not. That's the bottom line. Good morning, Mr. Murray. Okay, now we've got 9:30. Let's get started. Why do you think that's a buy? Well, first of all, you see the inverse head and shoulders. Head and shoulders, the normal one with the heads up there, the shoulders are here, is a negative on the price. This is a positive, called inverse head and shoulders. Number one. Number two, there's some support there. Number three, the 50 is holding. It's also support resistance moving average. It is just touching the bottom end of the buy zone, so pull back to support. And that's technically speaking. I think there's an enormous difference fundamentally in the euro and the AUD at the moment. I wouldn't say it's not sort of like a very weak against a very strong, pretty even Stevens. So I didn't really take that into account. I just looked at the technical aspect and might get a FIB to work. It doesn't have to work. It's a bit late now if it doesn't, but let's look at it. No, it didn't really work. Just below the 38.2, but that's not really the issue. The issue is one's not enough, but I've got head and shoulders one, number 2 support, number 3 50 support, and it's an upward trend overall, and it's the buy zone. That's good enough for me. So I thought that looks like a buy. Okay. And as soon as we say that, it's really taken off. It's up 1 pip. Don't get too excited, guys. Oh, 2 pips now. Oh no, back to 1 pip. Yeah, so let's just follow on to that. Yeah. Remember, give the trade a chance. I've been looking at it. The market's a bit sort of like all over the place now. It just can't seem to make its mind up, really. Might have said that a few times before as well. So give your trade a chance. Don't try and pick bottoms or tops, etc. Give it a chance, and then hopefully it'll come right. Anyway, that's the trade. Go in at market if you like. Haven't exactly been shooting the lights out, but never mind. Gives a chance who came in late to maybe tackle it. Don't forget, when you look at the signal, first of all, if you don't like it, don't do it, obviously. But if you do like it, just check the entry price. If it's better, go for it. It's the same, obviously, go for it. But if it's worse, how much worse to chase it? It's a ballpark about 10 pips. It's more than 10 pips away from the signal on the wrong side. Probably wait for a ball. Don't try to be chasing it. But if you look at the maths, and it's still worth chasing. It's up to you. But just do the little bit of maths involved. Okay. Right. Okay. The other one, give us some Jipanova to discuss it yesterday, Farnham and Company. But I still think there's a good chance that might have a bit of a pullback. Downtrend line. Yeah, I still think it's quite a strong currency fundamentally. Support there, and it seems to be holding. A few sellers coming in, so just keep my fingers crossed. We stopped out the other day on it. I get that, but I'm having a second go, and hopefully this time it will come right. Rise and shine. Okay, and Pope will do. Okay, so those are 2 out. Yesterday we had the GBP NZD. Talk about jumping around like a cat on a hot tin roof. Hey, yo.
I got stopped out on stop loss there.
Well, I didn't. Don't think so. What was my stop? 0435. No, I'm still in it. Just check. Yep, still in. So yeah, you were. Maybe you modified it. Okay, you didn't say that. Did you modify your stop?
No, Raj, according to the signal was 2.04358. And I got knocked on that exactly.
What have I got down here then? Hang on. What have I got down here? 0435. Yeah, 0435. You should don't quite that happen because according to this, it's 44. Even maybe a 4 or 5 pip spread, it should have been enough. Don't quite that happened.
Telling you, I got knocked, and I see Gerard as well, and just one of those things.
It's not one of those things. It doesn't make sense because I got exactly the same stop at 0435. You can see it.
Well, you also on a 500 to 1. Sorry, but it really, because there's a couple in the last 2 weeks that exactly on the spot. I can't see it on the trend itself, but I got knocked.
I don't understand that. Sorry, going over my bloody technology there. Because how come I'm still in? Yeah, I'm a 540, you're right. I'm still in. Well, I just showed you I'm still in. I've got mine down exactly as a signal. Well, I should do it. It's my idea. 2.0435. Still in it. That makes sense. Anyway, it's bounced back up again. Don't know what it's doing because it's actually quite nice profit. In fact, quite nice profit today, or about 9.5 hours ago at 58. Yeah, about 50 pips in profit, just under. So why that happened, I actually don't know. Don't know why that happened. A lot of things happened. I always know why.
No, I'm sorry for interrupting. I may understand. I got knocked out exactly 2 minutes past 9 this morning in 58 seconds. So it's, let's say, 3 minutes past 9, I got knocked.
Then I'm sorry, I hate big time. I mean, exactly. But what I don't understand is why, because I've got exactly the same stop and I'm still in it. And I've got exactly the same single stop. I don't understand why that is. If you have an issue like that, by the way, you just have to email. I'm not in charge of it, so you have to email Jarks. I think you all got Jarks' email address. I'll give it to you anyway. Don't bombard.
Sorry, I sent it previously through to Jock, and then he came back with a printed out on exactly the amounts, because he didn't look at the trend, he looked at the specific point for how long and how high. So he recorded it on a spreadsheet, exactly the figures, and then I can see I got knocked. So I don't argue anymore. I just don't understand it. Things doesn't make sense.
I mean, as you know, Fadi, I'm here to help and understand, etc. But I don't, and I just see. I forget it's pronounced right. Retchapili. I hope that's pronounced properly. He's also still in, because I'm telling you right now, I'm still in. How that? I'm not quite sure. I just don't know. Sorry. I don't know. So the only time that you have to take up with Jock. But if you come, I don't know. What else can I say? Bloody hell. It doesn't make a lot of sense to me. Actually, I'll make a note to maybe chat about it tomorrow morning in the training room, trying to a one-to-one chat to him. The YGBP and the stocks for some and not others. Just a little quick note here, just a reminder there. Okay, because yeah, as I say, I'm in. I just showed you I'm in, so it's better. Okay, because I don't know, there's no point in repeating it 20 times. I'll move on from there. Okay, jumping around. Do you want to go in again? I was a bit reluctant to stop down to jump in again. Done before, some success or whatever. But I'm still in. I'm going to stick with the trade. Let's go back to the 15 minutes. I don't know what that was all about. Don't know. Okay, well, anyway, what can I say? Yes, those trades are the Dow. That's right, the Dow, the NAS. We'll stop with that. We'll do the Dow alphabetical order. Where is it now? The Dow. Right, the Dow was in at where is it now? The wrong page. Give me a second. I know I'm doing well in it. 34396. Just a scratch below 34,400 was the entry. Stick with it clearly. I might get a bit of noise around here. There's a little bit of technical support there. So you might get a bit of noise around there. Hopefully it will therefore continue afterwards. That being as it may, you know, on the Dow and the NAS, I like to keep wide stop losses, at least a couple of hundred. But if you got in around about the 34 just below, you can place a stop below your entry, because you add 200 to 142, it's 342. So yeah, you can modify your stop to just into profit, depending where you got in. We're trying to keep about 200 pips distance because we're jumping around. Make it tighter if you want. That's your choice. I'm just suggesting, or whatever. It might jump from me, I don't know, but at least we made 200 pips on it, which is not bad. Okay, someone wants to get into the meeting. Just give me a second. Okay, so yeah, that's a couple hundred pips, actually more, about 240, 250, somewhere around about, call it 240 the spread. Pips in profit, so that's not doing too badly. Now it's jumping around normal. I think gave a bit of jip last night, but seemed to come to a party. Not much, but at least it's about 30 pips. But anything can happen from here. But slightly in the profit. So it's okay. Apart from the DBPNZD, which I don't know what else to say on that because you handled it quite well, guys, Gerard and Barney. I'm actually quite irritated about that. Yeah. Anyway, say the least. Nothing I can do about that, so we'll leave it. Okay, so yeah, I'm not sure I'll join it again, but we'll hopefully who's unfortunately still in and not stopped out like myself. Okay, I am, yeah. Good question. I'm not sure it's Jeanette or Ivan who's there, but anyway. It depends on the Nasdaq Dow, unless it's getting very, very close to TP or a very strong support resistance, I might bring it down to maybe 100, maybe even 50, not very often, or even just take it. But normally about 200 pips distance. On Forex, about 30 pips or maybe even 40 pips, depending on the situation, I get my stop down to break even. And then if it starts continuing in the correct direction, I might modify the stop to periodically to about 25 to 30 pips away from market. Hybrid, okay, something like that, 25 to 30 pips. So let's take one for an example. I'll take this one, doesn't really matter. You've entered there, it's about more than 30 pips in profit, make it 40 or something like that. Fired up to break even or just above to cover your spread, and it continues up, more profit, maybe 25 to 30, something like that. It's very, very much hit and miss scenario there. It's annoying to get stopped out on a pullback and you made 50 and it shoots on the target, you could have made 150, but then it's even more annoying if you don't adjust it, you stop out with 0 or whatever. Market movements are, well, in short-term market movements, people getting out all over the world all the time. So that's just sort of a rule of thumb, Ivan. Okay, I'd like to get a reasonable profit. I get to entry, and then after that, give up 25, something like that, maybe 30, 20, depending on the situation behind. A bit of a sort of a think of your feet job that, but not too close. I don't like below 20 because might as well take it then. It's too close. And don't get a 20 pip stop with the NAS. Just you're wasting your time. That almost guarantee that almost. I'm not using the word guarantee. That's a thing. But high probability you get knocked out in the jumping around. It's that volatile. Okay. Okay, good stuff. And it's not an exact science. It's more of an art. And quite a dose a bit of luck involved sometimes as well, and a lot of times doesn't make a lot of sense either. Anyway, but so far not too bad. Just hope these two this morning come right. With the two of them here, let's have a look. EURAUD 68, slightly in profit. NZDCH, everything happening there. Just around the break-even mark, so it's coming off good. So yeah, the Dow, I hope it runs more, because the good news on the Dow, it can, I'm talking about pips, not amounts of money, because obviously it depends what you got on it. So I refer to pips, and about 250 a month too, when I looked, that can make up for a couple of bad ones which you got last week, okay? So that's why it can come to a party when it does. Let's hope the NAS follows it.
Roger, sorry, I just wanted to ask you. It was my first time placing a micro indices yesterday, and then I just wanted to confirm, because Nasdaq is like such a huge, like all these companies coming in together, is that why, like for example, I only placed a 0.01 lot size? Is that why the profits and the losses move like really, really slowly?
Yeah, because it's so tiny. I just want to explain that again to make sure I understand the maths of this. This is the normal NAS I've got up here, right? Now, That's most people, let's say 5, 10 upwards, would be using the normal one. Okay. The problem is guys below that, especially new to the industry, don't understand contract size. So go into, let's say 0.01 or 2 on a NZD CAD for argument's sake, and they do the same with the NAS, not realizing the volatility and movements are much higher, and you have to have a wider stop. So the idea of that is to introduce people to the NASDAQ is by bringing the micro where they can a small amount of money and hopefully get the idea of it. It's not the idea to make money out of it. You don't really make much money out of it because it's so small. The idea is to build a psychological confidence, get the idea of it, and then when you've got a balance that is obviously a reasonable amount of capital in there, you can go to the normal one. Now, what I mean by that is just, remember I say you left click and highlight the one you'll look at, then you right click, and then you left click on specification. Contract size is 10. So what does that mean? 1.0. We have to contract, it's always about 1, not 0.1, but 0.1 is about 1.0. So one contract exposure. Obviously, you put a deposit down. Remember about the house scenario? You're exposed to £1 million house, even if you put down 100 grand or 50 grand or 70 grand, 5 grand deposit. That's just the marginal deposit. The actual exposure is the house you bought. You remember, you might put 20,000 rand down on a 200 grand motor car. But you're not responsible for 20 grand, you're responsible for 200 grand. That's the car. So the contract size, which you've entered into, is 10 times the figure on there, ignore the 3, 15,112 in US dollars. You multiply that by 10, 1.0 exposure is $150,000. When you go into that, it's like buying a house for $150,000. You get the idea, and that's a lot. If you put that into rands, it's just about 2.25 off the top of my head, 2.3 million rand. That's the exposure. You've got to remember that. You've even got a highly leveraged account where your marginal deposit is so small. And then you think, oh, I can get into that with maybe a grand or something. The problem with that is it doesn't take much movement than that to margin call you, because you've got to remember the exposure is what you're responsible for. You've got to get this. Maybe Google it if you still don't understand. If you cannot get this concept, you get a battle in trading. You've got to understand your exposure, your responsibility. You know, it's the bank's lending the money, but it's not their house, it's your house. Your responsibility is the £1 million house. Even if you put a tiny deposit down, it's still £1 million responsibility. And that's the contract size. Now, clearly, if you go in for 0.1 or 1 mini, the contract size from 150,000 becomes 15,000. And the contract size or exposure on a micro would be $1,511, not rand dollars. Now that's on 10 times because it's 10 times that figure. It's very important you guys got to understand this, because still if people are not getting this, Google it, go over it. You've got to sink in, because then you have this problem of exposure all the time, and margin calling and things like that. Well, I haven't got much money, increasing my leverage. That won't solve your problem. Right, on the micro now, left click, right click, left click on specification, and you come to contract size 1. So it's literally 10% of the value. So it says risk on the micro is 50 on 0.01. If you do the normal one, the risk on that 0.01 is 500, 10 times as much, which is hectic for a guy in 5 grand or less, even 6 grand or less, really. You get the idea. So that's why this is put there, so you can trade the NAS, get a feel for it until you got some capital in your account, when then you can go on the normal one. Okay, like, but from so I'm on this one at the moment. I just left click, I go to trade levels, and you see I'm in on this one. I use this one. I don't use the other one because I've got a bit more money and I'm more used to it, clearly. But if you've got plenty of money, it might be an idea if you get secure on it, try a couple of the micros. But just remember, it gives you confidence, but you won't make any money on it. What am I doing now? Sorry, on one thing. You won't make any money on it because the contract size is so tiny. Give an example. One contract on this is not times 10, exactly that's $15,000. So it's 1511 for a mini, and the contract size, not the deposit. Deposit's probably about, I don't know, 5 or 6 rand, something ridiculous. But the contract size is for 0.01 or 1 micro. A micro on the micro basically is $150 odd. Now that's fine, takes the fear out. The trouble is, once you take the risk and fear out, fair enough. Make you feel sleep better at night, but obviously take the gain out as well. So let's do it. I'll just do one example. Let's do risk reward on this one. We'll do the exact same one as the signal. So I'll go for a short one again. We'll go for a pending, and we got in at 15. I won't bore you guys, you know it already. If you've got a trade idea, just jump in, because I'm pretty sure a lot of guys are not still quite clear on this. 15,350 and 14,700. 14,700. That was a trading signal when it was that price came out. Right, your risk reward is 2.24. So if you go in with £1 risk and it hits the TP, if you get out beforehand, obviously that's all up to maggots. But if it hits the TP, your reward is £2.24 for £1 in risk. You get the idea, but often you're not in it till then. Now that says 37 Rand is your risk per micro. That's fine. And if it hits the TP, you're going to make 84 Rand. Simple as that. If it hits the TP. If it doesn't hit the TP and it comes this far and bounces, you get out, you might make 40 or 50 Rand, depending where you get out on. But that's the difference. So if you go on 0.0 on the normal one, the risk would have been 376 Rand. Your potential profit, if it hits the TP, 845. On a micro, it's this amount of money. Simple as that. So you say, guys, how do I just check these guys in? Should we? How to get the micro? Well, the micro, if you can't add it to your watch list, you have to go to the portal, and open another live account using the micro as your option. And then you've got to transfer funds into that account to play with it. But if you got 10 grand, 15, 20 grand, unless you're really, really frightened with it, it's not much point, because it falls into your risk profile using the normal one, if you get my point. Okay. And the other thing is, I keep saying, please, make sure that one side doesn't fit all. I mean, on gold, I want to show you something on gold. Look at this figure, it's 15,000. Let's go to the normal micro. I said it's 10. The normal one is contract size 10. Remember that? And the figure is 15,000. If you go to gold, let's right click, specifications. It says 10. So the contract size on gold is exactly the same as the normal micro. Sorry, the normal NASDAQ and the normal Dow. But look at the figures there. That's 1,900, call it 2 grand. Well, it's 15,000 NASDAQ, 2,000 here, and 34,000 on the Dow. Wildly different figures, the same contract size. So you don't go 0.01 on gold, 0.01 on the Dow, because one is 20 times larger than the other. Now, you don't say, I'll buy 1 million Rand house and 1 20 million Rand house. No, you buy 1 20 million Rand house or 20 1 million Rand houses. That's what the calculator does for you. I do it all the time. So, boy, let's do it in my head in practice. So it's a next door, a fancy bloody car of some sort, a Mustang, and he's taken off the buffers on the exhaust just to show off. It's a bit of a racket. Give me a second. Still a bit loud, but anyway, it's a little bit less. Okay, right. So that's why I have the calculator. So if it says 40 Rand per micro and you want to risk 400, clearly you go for a mini, 0.10. If you want to, if it says 100 Rand a micro and you want to risk 400, you won't go for 10 micros, you go for 4 micros. I don't see what the issue is with that, but it seems to be a continual issue with people. I don't know, some seem to be getting it. And I've got a feeling maybe emotions taking over logic again. But you've got to look at the figures and do it. I mean, you want to chase the trade, right? And it's better price, or you're not chasing, getting a better price. Clearly, you enter it. But if you're chasing it slightly worse price, put up the calculator and see if it's still worth chasing. And then you've got to check the risk reward again. If you get the EURAUD as a buy it at 59 according to Signal, and the price is now 79, the figures on just double click on here. Spreadsheet comes up. Give me a second. If you're getting in and chasing it, what's that saying? Call that 60, right? Never mind the point there. We go after pips. So ignore the last decimal point. It's 62.60, and when you get to your computer and see it, and the figure says on the market price up there, says 162, let's say 80. That's 20 pips above. So this all becomes irrelevant. So you've got to redo the calculator and see if it's worth chasing. If you do it, you find the risk is now 210, and it hits the TP, the reward is, let's say, 150. clearly you either got to wait for it to retrace or you missed the trade. Is there anything about that that's it's too confounding? Because I feel almost daily and people not getting it. It's so important. You've got to get it. You know, these bullet points that go on about are really a lot of the time not market movements, not what finds all around. That's just it's trading. In fact, I'm quite annoyed about that because you should still be in it. I don't know why that. He's taking a bit more like a gentleman, but that's another story. But those sort of things like market movements, I can't control that. But the other bits and pieces, yes, you can, and that's the sort of stuff you get on top of. Don't know, Google it or whatever. But like Nicky is saying, you marinate over it, but marinate as long as it takes. Go to another class or whatever. These bullet points that continue on about are absolutely vital to have any chance of success in this business. Okay, any questions on that? Do you understand specifications, contract size, risk reward, knowing the difference between a spread and a margin and the rest of it? Upping your gearing or leverage, or gearing, sorry, it's the UK word for it, leverage, same thing. That means just reducing your deposits. It's nothing to do with the market booms or whatever. If you want to risk £1,000 on the trade, you've done your calculator up there. It doesn't matter what leverage you're on. It just means what comes out your account is more the deposit than a higher leverage. I mean, you're buying a £1 million house, so it's a 20% deposit, 10% deposit. If it's 20% deposit, divide that 100, it's 5-to-1 leverage. 100 grand deposit, it's a 10-to-1 leverage. Just divide the deposit into 100. Okay. House price still $1 million. You get the point. I mean, if the house goes up from 1 million to 1.1 million, you've made 100,000 rand. Whether you got a 10-to-1, 100-to-1, or 500-to-1, that doesn't really make. All the leverage is about means you can, with a small amount of money, enter a trade. But it doesn't mean to say that gives you a license to overexpose, because then you get a risk margin call. So keep an eye on your free margin. Very, very important. In fact, it's vital. Because not a day goes by when people are getting margin call and they don't understand why. It's very important to do. Best way to understand, again, sorry I'm boring you a little bit, yeah, but other than that. If you put a trade idea, as I say, it comes first, but it's important to get it. What is the margin? It's collateral. Who's in front of me now? There we've got Ivan there. Ivan wants to borrow some money from me. Well, why am I going to lend Ivan money unless there's a damn good chance of getting it back? So I want some good faith deposit coming into it. All right, I'm a bank and he wants to buy a car for a couple $100 grand. I'm lending the money. I'm not giving Ivan the money. I'm lending it to him. So I want a return. I get my money back, some interest. So he's got to come to the party by putting a deposit down. Are you with me? Okay, NZD CAD for a sell. Sorry, go on about it, but you've got to get this. Okay. All right. Okay, NZD CAD for a sell. We don't want to get. We've got one on the NZD at the moment. So that's fine. Two on the NZD, GBP NZD, and NZD CHF. The NZD, hey, fine. It's been a bit funny lately, last couple of days. But more to the point, remember I mentioned a few times, we don't overexpose in one currency. Let's say you've got a balance large enough to say I can risk, let's say, I don't know, 1,000 rand per trade. That's fine. So you go an NZD CAD, NZD GBP, NZD CHF, etc. 1,000 rand risk, but you've got now 3,000 rand invested in the NZD going a specific direction. So from that point of view, just be aware if you're in two other NZDs, having a third trade NZD, you might be lucky. Just bear in mind before we go into discussing it, it's not always wise to be overexposed in one specific currency. Okay, but having said that, yeah, I would agree. I would agree. I see that as I think to say yes, yeah. I agree. To me, I agree. It's gone up. It's bounced off there. The cells have come in. There's a bit of support there. If it can break down, it's in the sell area. So yeah, I agree. I see that as a sell. But just bear in mind, you don't want to be in like 6 NZD positions. If something goes wrong, it's going to hurt you. You want to diversify. It's like a hedge, you know, your AUD, GBP came right, even though your NZD, CHF didn't, or whatever. It's almost like a hedge, if you like. So bottom line is, I like the trade, but don't overexpose one instrument. We've all got that. So let's have a look at the weekly. Yeah, look at the weekly. There you are. Even more fuel to the sell trade. Well done, by the way. I like it. 4 hour. Can't see too much on that. So I'll get rid of this. Yep, that's been holding around about that level going back on the 4 hour. So no problem with there. Don't think I would tell me much, and I'm doing a quick check. That seems to be coming off. So yeah, I like it. But bear in mind what I've said about overexposing one instrument, but we'll look at it because I do quite like that. You should be very much so. Thank you. Well spotted. Where are we now? We can put the stop, put up the daily. Let's have a look. That's the 50. Can we go a bit higher? A little bit higher still. A little bit too high. I'd rather put a little bit tighter. Maybe that'll do. 83.80. Make 83.20. Slightly wider, if you like. I'd rather a slightly wider stop than the slightly tighter stop, because it horrendously, like happened to Farney this morning, knocked out on your stop and then reverse and goes streaming back up again. So rather slightly wider. I think that should do the job. Maybe probably don't get cute with them. It's too tight. Maybe 80.80. Try 80.80. Yeah, that's fine. 115 rand a micro. Have to say I like it, guys. So I'm getting this out of the way. Get in the way. What do you think?
We took the trade exactly the same as sell on the 3rd, and it did stop loss as well. So I'm a little bit hesitant at this point in time because, as I mentioned to you, the CAT done funny things as well as the NSD.
Yeah, the CAT, I agree. We chatted about that yesterday on the phone. But parts of the CAT I can understand. The NZD is more to the point. It's some funny things as well. But how long that funny thing is going to continue, I don't know. But it's going to be forever. I think the overall fundamental is the Kiwi until things change is slightly weak in the Canadian. Technically speaking, it's a sell zone. I'm going to stick my neck out and say I still like that trade. Do you know what's finally said that? If you had a bad experience with a specific instrument, or you don't like the pound or the dollar or something, and you feel uncomfortable with it, stick with that. You know, if I don't like gold, I like silver. Well, trade silver, not gold. But I still like the trade, anyway, happening as it may.
No, I agree. I like the trade. It's just that in the same week, I'm going to stay out.
Yeah, that's fair.
Thanks, James.
No problem at all. You've been battered around by the euro about a month ago, and maybe the NZD last couple of days. And I was stopped out in the NZD one as well, but forget which one it was. But anyway, that being as it may, that's the trade. Then you're staying out, that's fine. Ivan likes it. Do you remember, we all have our particular, fancy word for idiosyncrasies. I mean, I remember old Lungi used to be close your ears now, Lungi, because we're going to start talking about the pound. You know what I mean? You get the idea. You don't like that film star, or you like that one very much, or whatever, same sort of idea. But just purely without the emotions involved on a technical basis, back to a certain set of fundamentals, that to me, I think I'm with you on that, Harold. I don't think you're Rambo at all. I think it's not a gung-ho approach at all. I think it's a well thought out approach. Even if it goes wrong, we don't know what's going to happen to the market, but you did the homework, and that I think it's the right trade. Okay, so I'm going to put that down because Ivan likes it and Harold likes it. Anybody else like it? Or we're hearing a tremendous amount of clucking going on here. For the new guys, that's trading room jargon for chicken. And LIAs leave it alone. That's another bit of trading room jargon. So start speaking to somebody outside the trading room, like on Bloomberg or whatever, you wonder what you're talking about. Okay, that's what, 36 minutes. and 80.80. Is that right? 80.80, yep, and it's 150. Give it a try there, Nikki. Give it a try. There you are. Depends how much money you got. Remember that. If you got, it's 120 bucks a micro, call it that. So you need about 1,500 rand minimum. And if you're in a trade already, make sure you've got enough free margin going into it. Very important. Work on percentages. You don't want to be exposing more than 10% of your capital if you've got 3 grand or 2.5 grand or less, something like that. And if once you get about 5 grand plus minus about 5%, once you go up to about 25, 30, 40 grand, you start reducing to 3, over 50, about 2% of capital, plus minus, not exact. But if you start going in with about 20, 30% risk per instrument, if it goes well, okay. But if it doesn't, then the small capital is even smaller. Just remember that. Well, you're probably just starting, Priscilla, but it might take a bit of time, but this sort of stuff one has to learn. It's the basic arithmetic, or the maths of it, if you like. It's got to be understood. Absolutely has to be. Because I'm telling you right now, 90% of people are battling, not because the training or whatever, they're not grasping the arithmetic behind it. Yeah. And that's why I say a guy's got 500 rand, they can't really trade. Because every time they go in, with very, very rare exceptions, there's some 1 micro on the micro NAS or 1 micro on gold. Most of the time, the figure here is going to be above 10%, which is 50 bucks from 500. If a guy with 5 went into this one, he's risking 24% of entire capital. And sometimes a highly leveraged position, because the margin's so small, he goes with 2. And that's his asked for margin calling this. Maybe Google it, maybe because I do it every day and I forget that. It's like trying to explain to someone when you've been driving for a long time, they first get into a motor car. But whether Google or whatever, unfortunately, it's a bullet point that has to be understood. Because this is where the cock-ups are occurring. Incorrect volumes, not understanding why, where, or what. Exposure, leverage, that sort of thing. You're in that kind of market. Like if you're going to go in the car market, you've got to know something about the motor car. Same sort of principle, very important. Okay, all right. Okay, so there it is. They might like it, might not. I'm going to just copy and save it and push it onto the. They might like it on the trading thing. Just give me a second. Is it coming up? Okay, give me a second. Sorry, not coming up. Okay. What's happening? That's great. It's just slow. It's coming up with. Now what? Okay. Okay. Right. Any questions? Anything you want me to go over? I say it's not a trading line. I'm talking about Bollinger Bands. That's what craft is. But these bullet points, in the meantime, like Gerard did then, if you've got a trade idea we'll discuss, that takes precedence. But in the meantime, I might just have to go on about this because, as I say, I think it was Priscilla there came up and says it was a bit gobbledygookish. I'm so glad she said that because a lot of other people probably think the same, but they're scared to ask. Good for you. But I'm going on about it because it's so important. Hey, Nikki, it's very important. Is that right? Well, we shall see. We shall see. AIs at the moment, however competitive it is, if everyone buys the AI and follows it, it will be there for almost self-fulfilling. Otherwise, it depends, but we shall see. Yeah. Okay, right, so there it is. Okay, let's move along. Right, when we send out okay, it won't be sent out, just saying that Melissa saying that we've already got 2 NZDs out. I'm not too sure third one. Okay, so maybe that's not a bad idea. Anyway, let's see how that goes. Right, yeah. Anything happening on the Dow? Don't know if you guys did move your stock. It's not doing too badly. Okay, right, yeah. So, guys, please give the trade a chance. Don't try and jump in and jump out every time you get a blue or green. You can if you like, but you'll be paying the broker very nice. You get a Christmas card from the broker. Thank you very much. But give the trade a chance. People get so scared when they see a bit of red and obviously instead of the whatever it is. Give the trade a chance. It might take a couple of days. It might take a couple of weeks. It doesn't matter. It takes 2 many months. If you're making a lot of money, why get out of it? Run with it. And if you got in at market price, it was just 4 pips below 34,400. You're the best part now, 270 odd, 260 odd pips in profit. What a pleasure. 260 pips profit, guys. And you know, you get stopped out at 80, 90 pips on the Forex. It's like 3 losses on the Forex already, but still in the trade. You've made it up on this guy here. So stick with it, but just to protect. I don't like, as mentioned before, too close to stops anyway, but certainly not the indices because they're so volatile. So you can put it down to maybe 350. There you are. 350. I think most guys got in on the short above that cover your costs. You won't make much on it. You may make some, but not much on it. You get stopped out, but at least you're protected. So whatever happens, you make a couple of bucks or a lot more bucks. You get the idea. And it seems to be holding. There's a bit of support there, but I'm hoping it's going to maybe break through. But let's see if we can get there for TP. We get the TP. What's the TP on the Dow? This is important, guys. 34,000.
Yeah.
Wrong. 34,000. So it's got another 100 pips to go. So it might have the TP, and then you'd have made yourself, what's that? Yeah, just under 400 pips. That's a nice one. And hopefully the same with the NAS. Okay. Well, this is it, Pietro. Yeah. Jump in, jump out, you panic, and then it goes your way, and you take the 10 rand loss in, you jump in again, whatever. No, it's just give the trade a chance. Okay. Remember, you're always going to get the noise. Always, always, always. The up and down movements. You got your strategy, you got your volumes correct, let this thing run. Okay. Doesn't look pretty in the red, go to the shops, come back. It might be look blue, who knows? Give it a chance. And again, guys, don't jump in as soon as you panic and see a bit of blue, it might be taken off you, grab it. By that means, why have a calculator if you're gonna grab it so quick? You know, there's no point in putting a calculator in. Yes, it is, Nikki. Yeah, well, for 270 pips in profit, I think fairly likely that ship has sailed. Yeah, I wouldn't be going for it now, no. But I don't know if anybody's still in that. If it should be, I hope so, because it's going up very nicely. And I've said before, we've done it before, a good one on either two indices, pip-wise, not trying to money spending on yourself, but pip-wise, very pipful-wise, good stuff, Farney. Pip, thank you, great. Pips-wise, a win on the Dow, Nasdaq, on both, can make up for half a dozen or more bad ones on the Forex. And we haven't really had half a dozen on the top of the Forex bad ones anyway. We've had a bad run, but maybe, I can't remember, maybe we have had 6 bad ones, probably haven't done, but it doesn't happen very often. More, you know, we get a bad run, we get 2 or 3 blown out, but that's not that often. So yeah, look on the bright side of that. And another one there, don't blame the signals you're doing wrong, because often people turn winning signals into losing ones. Jump in the wrong price, don't do the volumes correctly, get out too early or whatever. That's just not understanding the signal. Very important. Yeah, well, this is it. Yeah, I missed out on buying that Lamborghini. Didn't have a finance. Oh, that better one, the luxury yacht in the Bahamas. Didn't have a finance or whatever. That happens. So that's a clear example, Chris and company, why you do need capital. Great to have an opportunity to Dow, but you've got limited capital. You're already in the NAS, or you're already in the CAD JPY or the Euro dollar, whatever, and you can't do this one because you haven't got enough capital. That is frustrating. Yeah. Okay. All right. We'll clear on that. Now, a couple of things just wanted in a quiet moment. Just want to put on for you, because I know there's a few new guys in here, so give me a second. I'm going to put on the dollar index, try and do it every time. So these things keep getting in the way. Where is it now? Ah. I'm not printing it for the fun of it. Keep it. These are important. That's the dollar index. The other one is the yields on the 10-year note. That's also useful. Copy, paste, copy it. Not putting on because it seemed like a good idea at the time. Got to come to the party, guys. These are important. If you're a bit confused to start with, anything you do, you start confused. Don't you say give up, stick with it, take notes, ask questions, and it'll fall into place. And my name and number, I think most of them got it. Roger, trading support. You're overseas, obviously put in +27 and take out the 0 in front of it. I'm sure you all know that. There you are, guys. So you've got the stuff there. Righty. Anything happening on the trade this morning? You are AUD. A little bit higher, but not much in it. Is anything happening on ZDCHF? About the same. Pretty quiet. Okay, now it comes back to quiet. Yeah. We got weekly jobless claims, the automatic data processing, which was mentioned earlier on, the ADP, coming out this afternoon. And in the US, most of the big ones are the US. If I don't say US, I usually mean it. If it's Euro, I'll say Euro. Otherwise, just take it, I mean the US, okay? And then tomorrow's the non-farm payrolls. Yeah, I don't know what that was all about. Now, I'd rather you bring that in front of Farney here. We're already pissed off about it, and I'm on their side. Yeah, pretty irritating. Anyway, so the non-farm payrolls and US jobs reports coming up us to tomorrow. Now, what I want to discuss quickly now, I know a lot of you guys know this already, but just for the newer guys coming in, it might be an idea to join me there, where we're going to do what's called a straddle trade for the release. Yeah, it almost hit the stop loss. We're moaning about it because I'm in that one, and it didn't hit mine. It didn't hit Pedro's, a couple of others, and clearly not yourself, but other couple with the same stop loss stopped out. So I'm not sure why that is. Yeah, but I give it out that. What else can I say? Can empathize as well. I can say all that. So we'll move on anyway. So we got the non-farms coming out tomorrow at 2:30. That's the data release. I'm doing a session at 2 o'clock till 3. We can do a straddle trade if you want to join me in the trading room at that time. We've had several of them, and I think one didn't go well. All the rest went pretty well. So error probability is likely if you lose 1 out of 8. That's a pretty high ratio of winners to me. So suggest you do it. What I do not suggest you do, guys, if you're on a demo or if you've got 2,000 Rand or less in your account, don't bother joining. You won't be able to make use of it, and there's only 100 people allowed in for whatever reason, and you could be taking the place of somebody who has got some money to make use of it. So we don't want sort of people watching it for the fun of it. If you want to know how to do it, put more money in, and times like this I can explain it. Okay. No, we don't. You can do as many as you like, but it moves the market short, but it's not quite the same extent. I'm going to stick with the Zoom ones on the CPI and the once a month CPI and the non-farms, 2 a month. Others you can do, try them out yourself. Okay. Okay, so we will be doing that straddle trade if you want to join. Guys, I've got a few bucks in. It can end the week very pleasantly. Those who've done it will know it is a quick way to make a couple of bucks. So do come and join me. Okay. Be in at 2, don't come at 20 past, because then you won't have time to learn how to place the trade. You won't understand the mechanics of the trade. It doesn't take long, but I can't do an explanation after 25 past, because that's when you place the trade and we wait for the release. So if you don't join at 2 and you join afterwards beforehand and you know how to do it, it's not a problem. If you don't know how to do the straddle trade, make sure you're on time at 2 o'clock so you get the understanding of it, so you can have it nicely placed, ready for that release. Okay, very important.
Roger?
Yep, go for it.
Roger, just a quick question. When there's interest rates announcements on the economic calendar, is there a possibility where you can end up trapping the price, where you can be in a buy and a sell status?
Tracking the price and do a buy and sell? What? Sorry, I missed that. Say again.
No, what I mean is, say on the interest rates, when the economic information comes out on like Bank of England or Bank of Japan, whatever, and you're setting up a straddle trade, is it possible where both trades kick in?
Yeah, absolutely. That's right. There's no brainer, guys. Pedro, I just want to mention just to you, but everybody there as well. If you look for the no brainer, something for nothing, you end up usually falling flat in your face. There's got to be some risk for reward. There's got to be a buyer and a seller. If it was a given 100%, then who is going to pay you? Because if you get paid 10 Rand, that 10 Rand's not falling out of thin air. It's got to come off somebody else. Now, you get my point. There's always going to be some sort of counterparty area. Yeah, and so that can happen. Let's say we're in a straddle trade now. Should I stick to gold, or maybe do the dollar yen tomorrow? What the hell? If you see what you're doing. Right, we'll do the straddle trade now. Okay, put in the 15 minutes, and you put, for argument's sake, you put something in about there, and you put something in about there, so about equal either, so that. Just use an example. Right, the news comes out, and the market thinks it's quite good, reacts to it. Then hang on a minute, it's not that good. Comes down. Now in both of them. You understand that can happen. Luckily, it doesn't happen that often, but I've seen it happen. Most of the times it doesn't, but there is no such thing as a risk-free trade. Otherwise, everybody go out, borrow up to the hilt, mortgage your house to the hilt and bung it on here, and then you can retire after 2:30 tomorrow. No, you get the point. So yes, it does. Quite good question. Yes, it can happen. We call that the whiplash effect, but not very often, thank goodness. But it happened, I think, last week. But more times than not, it doesn't. But prepared to care, that can actually occur. We want to stick with gold, so we'll stick with gold then. We'll do the gold tomorrow, but the other guys done it before, choose the instrument they want. long as it's something with the dollar or the gold or the NAS or something like that. But yeah, that can happen. But again, you know, if you, I tell you what, the best way to look at it, Pietro, Chris, and everybody else out there, if you've been betting on something and the last 10 times you betted, you lost once or maybe twice, you'd be quite happy to continue betting because the odds are on your side. That's what I'm trying to convey. Okay. Okay, so there we are. But please, I beg of you guys, stop looking for the no-brainer. You might get lucky, but then you might not. Okay, right, so yeah, so we'll do that tomorrow. The guys got a couple of bucks there. Come and join. Get there on time if you don't understand the travel trade. If you do, obviously, then you can join it later if you want. Don't need to explain it. But those who don't, make sure at 2 o'clock, because I won't have time to explain you coming late, because we've got to have them understood and the trades placed and the correct volumes worked out. So we're ready to be in the market for the release. And basically, we won't go into too much now, do maybe tomorrow or whatever. What happens if it's here now, if the news is good for the instrument, it shoots up, that is taken in, we cancel that, it shoots down, we cancel that and run with that. So we have a buy stop above and a sell stop below. But I'll go into more detail tomorrow. I could go in now because I had a lot of guys at the event some time before. They probably want to look at trades or something. Bummed, I won't be able to attend tomorrow. It's come out every month. That's right. Another point I'll make on Nicky and company. There's going to be other opportunities. So it's not the end of the world. We've got the CPI, I think it's the following week. We'll update on the dates on that one. We can do that one at 2:30. And then the following month, 2 per month, NFP and CPI. So you miss one, can't make it. That happens, no problem. Next one. Oh, hang on, that's a good point, because I can't make tomorrow. I've got things a rugby match on. So that's a good point. So I'm going to have to take that. Just joking. Fortunately, I've got to leave the NFP rugby match or no rugby match. How much you need on dollars? Good point there. We didn't cost you anything. Make sure somebody got quite annoyed with me, so I'm trying to sell him something and talked about the VIP group. No, it's your money. They're just saying there's a minimum balance to be entered into it. Anyway. I personally think around about a minimum $100, something like that or more. Which is point there. You got my number, guys. If you got $150 US in your account or more, obviously, or 2.5 grand or more, just WhatsApp me, let me know. I'll add you to my WhatsApp group, okay, where you get daily updates and all the rest of it. And there, these sort of things are posted immediately, so you get it fresh off the press. You often get the other stuff as well, but later on. But at least that's fresh off the press. But yeah, and the rugby can be recorded. Nice one. Yeah, but. Yeah, about 2 grand or $100, something like that. So you got enough money to be able to make use of it. You don't take someone's seat up if you can't make use of the trade. You can't do it, in other words. Well, they actually start today. Not start, it's the 3rd test, but beginning to get the 3rd test today. Ridiculous and completely crammed. I hardly have time to take a break. They're playing a ridiculous schedule. Anyway, so be it. Okay, so yeah, Edwin, are you good with that? As I say, if you've got more than that and you're not in my group or whatever, just WhatsApp me. You've got the number, and I'll sort you out. And then you can, I can work with you. I mean, we can work. This you've got something to work with, got capital to work with. The guy's got a few $100. You can only go 1 micro at a time. You can't diversify, and I don't kind of offer any value really, because it's advice, just one, and he's stuck in that one. You're good, good. Remember, you got 1,000 rand, for argument's sake. 10% rule means you got to go with 100 rand maximum risk. A lot of those trade ideas more than 100 rand, so you can't even go into them. And then let's say you do go into one, you can't go into a second one because you haven't got enough margin. So the problem with that is then you got all your eggs in one basket. That's why I keep on about it. Not so I'm trying to grab money off. It didn't come to me anyway, just for your sake. It's like going shopping with 20 Rand in your pocket. It's very limited what you can do. Same principle. Okay, right. So we'll stick with gold then. Okay, I'll do the gold tomorrow. Not stop getting in the way, confusing the issue. Keep it uncluttered your charts, and we'll stick with gold tomorrow. But if a guy wants to do the yen or the euro or whatever, they can do it. Euro dollar, yen dollar, I mean. The only reason I'm not that keen on the NAS, you can do the NAS micro if you want, just because of the spread. You've got to have a wider buy stop, sell stop because the spread is much larger. Okay, well, that's all clear. Klar, or alles klar. All right. Okay. Any questions? Any questions, guys? For sure. Absolutely, Akona. Absolutely. Please be there. Please be there. And the more times you can send this, the better, because it'll start to fall into place. You know, don't get in and out too quickly. I don't want to mention names, but so you know, I'm talking to you, like you. Jump in and out too much. It's not, you know, not clever. The costs go up, but you're not, just give the trade a chance, basically, guys. Okay, but absolutely, I'd like to have you there. I'll show you how to do it. Make sure you're there at 2 o'clock, because that's when I'll be on it just before 2, and then you can understand the mechanics properly. I mean, Farley joins at 20 past. It doesn't matter, because he knows it, done it. But if you're doing it the first time and you come in at 25 past 2, tough, you missed it, because I won't have time to explain it, because you won't, even if I did, you wouldn't be able to have time to place the trade before +2 release. Yeah. And don't forget the normal rules. I take 20% of the profit. I'll WhatsApp you my bank account. Don't forget that. My luxury yacht in Bahamas, it's gone to dry dock, and I need some money for it. So yeah. Yeah. Sounds like a film star bleating. I tell you what, we have heard of Kardashian. As a note came up, Kim Kardashian has sleepless nights. Well, I don't know. That's a bit of an earth turner, that one, isn't it? My goodness. Never mind the starving millions. She has sleepless nights. That's a fantastically interesting piece of news. 30%. Oh, Chris, you're a star. Yeah, sorry, 30% sounds about fair. The only problem with that, everyone shouts it. What if it goes wrong? Do I have to pay them 30% of the lot? Oh, no, that's different. You know, it's like you've been to the casino and you shout out to the lads, hey, you had a great day at the casino, and say, well, the round's on you. But if you go into instead of a terrible day at the casino, they don't say, well, the round's on me, do they? I don't know, actually. You can do both if you've got enough money for it, Chantal. Too much money you got. There's no harm in do gold and euro dollar if you want. I think I'm going to do $2 above and below on the gold. I think $1 a bit close, so I'll try $2. I think it's about right. I like $1.50 actually, but then people seem to get a bit confused with that. So maybe $2 above and below, and you can use 10 pips above and below if you're going to do the currency, and 25 above and below if you're going to do the index. Oh, were you indeed? Now that is interesting. Oh, wow. Someone just WhatsApped me, who's on here now, said they were an FX dealer. That is interesting. Well, there you are. Wait, money runs the world. That's why it's such a big thing, the Forex market. Okay, Nedbank. Okay. Oh, that is interesting. Well, we should catch on to this quickly then. But be there tomorrow. It goes. You see, you have an expected release. If it's a big difference in expected and the actual, we should get a decent, big, quick move. And it's a nice way to make a quick buck. But there's no guarantees, so don't put all your money on it. It is a bit tricky, you're doing 2 or more. It takes a bit of practice. You have to be like a piano player. You know what I mean? I'm saying, yeah, it's a bit tricky. I mean, some of these youngsters, I mean, I've seen some of these prop traders doing hundreds and hundreds of trades a day, and their fingers are playing that bloody keyboard like like a what you call it, virtuoso on the piano. But yeah, if you can't cope with two, then do one. Yeah, but if you're starting, do one. Don't get cute. Don't get cute if you're starting. Well, it'll be one if you get in on time. Don't come in after 2:30 and say, "Can I still do it?" No, you can't. You missed it. But we'll do a trade. If you're doing it the first time, we'll stick with one of them. If you're quick fiddling around on the keyboard and you got the hang of it, then you maybe can do two of them. You've got to rush between the two to make sure that you delete one of them, modify stop. It could be action. There's a big difference. The thing can move. Those experienced will know that. You suddenly see if it comes in there, it can shoot up like that or shoot down like that. And if it goes shooting down, this order will be hit and you're on board. Delete that one. If it shoots up, you're into profit already, delete that one, then you put the stop in and run with it. And then take it from there. Yeah. When is the CPI? Is it the following week? I think it's the week after. I can't remember anyway. But we'll be notified of it near the date. So don't worry about it, Nikki, and those who can't. Yeah. Okay, you talked to me there. So 1 second, I didn't see them all. Just sort of flash on the screen. Just read it out quickly. Meet tomorrow. Yeah, that's right. 2 o'clock, I'll be explaining the mechanics of how to place the trade, what's required. It's not that complicated. It does need a bit of a few minutes explanation. I'll probably do it 2 or 3 times so people get it. Then about 25 past or just before 25 past, you'll place the trade. No, you don't do it in the morning. No. You don't do anything. Don't do anything till you join me at 2 o'clock, and then I'll explain how it works. I'll explain the mechanics. Of course you can, Priscilla. I explain the mechanics of it, and then you can place it about 5, 6, 7 minutes before 2:30. And because the reason why I place it just beforehand is you don't want the buy stop or the sell stop to be filled, because the market ain't going to wait for us. It slows down quite a bit before the release. There's very little trading goes on. The world is waiting for the release. Even the middle of the night in Australia or Japan is still going to be up for it. So you get my point. But you don't want to have your buy and sell in there, and then before 2:30, it moves down, fills you in. Now that's not the last thing you want. So place it just before the release, and then wait for the release. But I'll explain more. Oh, I see you mean the signal this morning. Beg your pardon. As long as it takes. Another question you can ask: how long will I be in that signal they enter? My answer to that is how long is a piece of string? No idea. Look at this candle here. Doesn't matter 15-minute rebound. I'm talking about comparison. This happens to be a 15-minute chart. Look at that candle there compared to that candle there. I didn't know that was going to be a bigger one than this one. So it depends. Give the trade a chance. You might be until Monday. You might be until Wednesday. You might be out the same day, depending on the volatility of the markets. But rather than just grabbing it suddenly quickly, rather modify stops, reduce risk till it breaks even, and then into profit. So you bought here, your stop was down here, and it goes up, you modify your stop. Not too close, guys. And it keeps going up, modify, until either hits TP or you're stopped out. Okay. Don't forget, very important. So yeah, I'm doing again 2 p.m. tomorrow. Write that down so no one's too confused. 2 p.m. in Trading TR for the NFP. It's a non-farm payrolls. 2:30 release. Just so you know, same ID as this one here. I spell release EA. Right. Just so you got it there. Okay, I can look at it just now, because obviously I'm dealing with this. Can't go into too much detail there. Okay. Let them run. They're doing fine. Let them run. Soon see a blue, you panic, you want to take it. No, give it a chance. It'll go up and down. Let's see you hit the TP. A lot of guys already out the down because they panicked. And always a bit of money, I'll take it. We're in the down now a couple of days. It's about 270 to 80 pips in profit. Give it a chance. Okay, anyway, where am I? Yeah, okay, so there's that. So it's released at 2:30. So for goodness sake, if you haven't done it before, be there at 2 so I can explain it. Good question there. Because the probability is on your side of a likelihood of success, but not 100%, guys, I sometimes increase the risk value. Yeah, I'm going to work it on around about, I think working on about 90 Rand per pip. So yeah, something like that. So you can increase your position size. Don't go too big, guys, because it could go wrong. There's no 100%, but you can maybe increase it a bit. Yeah, I would agree on that. So if you're normally risking 500, maybe we can knock it up to 750. If you normally risk 1,500, maybe 1,000, 1,500, something like that. But make sure you've got enough free margin. So already also I'm prepared to risk 2 grand, but you forgot you're already in open trades and you haven't got enough free margin, then you get margin. I fed up. Well, a bit new to all the jargon, you'll get it. You all started somewhere. Okay, guys, talked all about that a little bit, but it's so vital everyone's on the same page. And it might be blindly obvious and been doing it a few years, but it's not when you start, like anything else. Okay, I mentioned GBP NZD is getting a bit of recovery there. A little bit, yeah. That's come off again. That's all over the place, is bloody thing. Okay, just let's go in here. Yeah, that's fine. Ivan, that's fine. No problem there. Yeah, it's the guys who got, you know, margins in the hundreds. And I know why they're doing it. It's because either promise they're going to make some sort of lottery kind of return, or they're scared and they just want to try it out, which is fine. I completely understand that. Totally new, of course, try it out. But no problem with that. Just bear in mind, small capital means you cannot diversify. That's the major thing. When you want a bit more money in the account, doesn't mean say something triple your position size. No, it means you have enough free margin to go for 2 or 3 trades. You're diversifying the risk, not all your eggs in one basket. As simple as that. It means basically, I think it's around about 100 maximum attendance on the Zoom. Well, I think you get more, but then you've got to pay more money, which they're not going to do. So just saying, it's not, so we're saying 100 people. So if you join at 2:20 and 100 on board, you can't get in. But if a couple of people are left, you can. So just make sure that that's what I mean. Show your seat, basically. You know? If the venue's full, you can't get in. What else can I say?
That's why I tried not to join later than 2:05 at the latest.
Well, exactly. I mean, as I say, be on time. That's some simple. Have money in your account and be on time. Simple as that. And Fenton's going to give me a hand with admitting it wrong. So you go click, 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 click. I can't explain it because I'm too busy admitting. So he's going to do the admitting so I can concentrate on the explanations. And you can still interact if you're not sure or I missed something or whatever. Okay. Okay, good. It's quite good fun. If we get a decent differential to the actual and the expected, and it really really jumps. You not get a high. It's exciting. It's fast moving. When you get to this side, it's boring, like being in a traffic jam. This is like being on the free open zone in your Formula 1 car. Straight on the bloody, what do you call that? Before you get to the chicane, you know, open road there. No traffic cops. You can really put your foot down. You can really, you know, can move. It's quite exciting. You'll certainly whet your appetite for doing it more often. Okay. Thoroughly recommended. Anyone can join. It's nothing to do with SMC. Anyone can join it as long as you've got some TOM in your account. I had an argument yesterday, which got quite irritated with him. The guy had about 53 in his account. He had his stop so close on the NAS. He didn't understand about the spreads on the NAS, and he thought taking his money off him, he's going to take his business elsewhere. All I could do not to be sarcastic. Oh yeah, I can't wait to get 50 rounds, about $3. Hey, it'd be running after you to get your visit. I mean, be realistic, think. Right, so yeah, that's just hovering doing its thing. Let's have a quick check. EUR/AUD, anything happening there? Not much. Very quiet today. Yeah, it's quiet. Might be a bit quiet going tomorrow. Hope that, you see, the non-farm is very important. It might give a directional interest rates in world markets. So a lot of guys are being fairly slow, waiting for that important release. So hopefully you're going to get a big move there and get some direction. You can do that, but I'm busy here, so I can't do it now. I can, but then what do you do it after 11, check it out. Okay. All right, where are we? Anything else you'd like to ask, discuss, going into the year close? About 15 minutes.
Roger, I wanted to
Go for it.
I just wanted to ask, this might be a very obvious question, but
Sorry, Nikki, 1 second. Sorry, well, it's Wednesday the 12th. Is that fact, Pietro? Thanks very much. I'll make a note of that. Save me looking it up. Thank you. 1207 CPI. Make a big note of that. NB. So there you are, Nikki. That's on the 12th Wednesday, whenever that is, whatever.
Okay.
Great. Anyway, go on. Go for it.
I wanted to ask, so let's say you're in a trade currently from like today's ones with like Forex and like the NAS micro. How big of like the jump will it make if the
Sorry, Nikki, sorry to interrupt again. I'm very, very sorry about this, guys. With too much tea. Hold that thought. I've just got a little boy room. Sorry. Sorry about that, Nikki. Yeah. Go on, say again.
So I just wanted to check. So let's say you're in trades now currently for like whatever, like NASDAQ or AUD, CAD, or any of the other ones. And then if you can't trade, or if you can't come to the trading room tomorrow, and like I'm not really sure how the trades will go tomorrow, what are the chances of it's carrying on going in your favor for like the NAS or the AUD CAD in the position where you place it for, in the direction that you place it for?
I'm sorry, I missed that. What about the NAS place? You're not going to be there. I'm not quite sure I'm with you. Say that again.
Oh, okay. So I was just asking, let's say you place trades from today.
No, you can't place a straddle trade using the NAS.
No, like you placed normal trades today. So you place normal trades, and then now let's say you can't come to the one tomorrow. Then what is the chances like it's going to move against you in the opposite way if that happens?
Oh, sure. So the fundamental coming out. Forget the technical fundamental come out. If you're going long on gold, and it comes out where let's say the jobs are much higher than expected, which can consider inflationary, which will confirm more interest rate rises, and that dollar strengthens, then gold will fall off. Never mind, it'll fall off. It's simple as that. Or the opposite occurs, it'll shoot up. That's exactly it. That's why sometimes people like to protect themselves in an open position if they're in a profit by modifying their stock to break even, just in case. They want to be on board in case it goes in their favor. They don't take a fat smack, get stopped out if it doesn't. And it can happen, as Pietro says, there within seconds. It's a big differential, be a sudden movement. You're sitting there quite happily. You're long on this one. That's a worse bad in the units, particularly use the euro dollar there. You're long on it, right? And then your stop loss is here. And then suddenly it comes out with a very strong dollar. The euro, clearly, opposite end of the seesaw, will come off. It'll just bump down there and knock you out. Or vice versa. Anyway, tomorrow's trade is completely separate, but you won't be doing it because you obviously can't be there. And I suggest don't create queue if you haven't done it before on your own. Rather be there in the room when you can on the CPI. But yeah, that could easily happen. I'll give an example. You're in the GBP CAD for argument's sake. And the Bank of England in 5 minutes' time released an interest rate decision of much higher than expected, and you're short the GBP CAD, that GBP will run north and knock you out. Simply because the fund, that's why I have the economic fundamental calendar up for you. Because those 3-star big ones, and the biggest of the lot is the CPI and the non-farm payrolls, can have a major effect. I've seen, not very often, don't panic now, but I've seen the euro dollar move 150 pips, bang on the release. So it's now 2:30. Within 2 seconds, bang, it's gone up 150 pips or down 150 pips, depending. We don't know, but I'm saying it's a release and it'll have an effect on the market and how that's interpreted. That's why we have a buy stop, sell stop. We don't think it'll be pushed up or down. It's down, we kicks in our sell. It's up, it kicks in our buy. As simple as that, if you get the concept.
Okay, so basically just hold on to your stop losses and you'll take profits on your current ones.
Well, not, don't get out in case it goes in your favor, but just bear in mind it might not. I mean, if you're in the euro dollar and you know it's going to come out in 2 minutes time or something, and you're in a 30 pip profit, move your stop loss to break even just in case. But you don't want to be on in case it goes in your favor and suddenly you're 30 pips. You got in your trade yesterday, and now 24 hours later, 30 pips in profit, it goes in your favor. Suddenly, within a couple of seconds, you're 100 pips in profit. So you want to be in case it goes your way. But if it doesn't, you don't be stopped down at a loss if you're already in a profit. If you're on a negative, you just keep your fingers crossed. You don't get out of it because it might be in your favor. You've got your strategy anyway and just hope it goes in your favor. Make sense?
Yep, makes sense. Thanks.
Great stuff. Okay, as another question, Buzo, yeah, what is the difference between, just a second, chat line up a bit. No, it's not. If it was a micro, we wouldn't call the micro. We wouldn't have a different name if it was the same thing. Okay, so no, you mean, beg your pardon, no. Yeah, it's the same thing, it's just a different contract position. It's like Nikki's a multimillionaire. She never told you, I'm letting you know that. And she's going in one standard lot, the euro dollar. But her husband, who she just divorced and took all his money, is not. So he's going in with one micro. The movement is the same, except if it hits TP, obviously the standard lot will make more than the micro. So the price is the same, it's just different position size, different contract size. Sorry to tease you there, Nikki and your husband, but that's only in fun. But as long as the concept with all the banter and comedy, you understand what I mean. So the price is the price is the price. It just means that you can now go in because the contract size is 1/10 of the normal one in contract size. Yeah. You see what I mean? It's just, yeah. So the Dow micro is contract size 1. The Dow normal is contract size 10. So obviously a 1 pip movement is going to be 10 times the value on 0.01 on the normal compared to the micro. That's why it's called a micro. Manifesting millionaire, I like it, yeah. Or you're marinating on becoming a manifesting millionaire, whatever that for alliteration. What's in a bull and a bear? Well, bull is when the market is likely to be bullish, which is positive, and the bears are like to be negative, downside. So the market's coming off, we're in a bear market. If it's going up, we're in a bull market. Now, the next question, why is it called a bull and a bear? Honestly, nobody knows, funny enough. A lot of people got theories on it, but nobody actually knows. Yeah, that's right. Doesn't matter if you're in the wrong side, you're going to get bored. Okay, right. I think that's covered that. Any questions, guys? If you're not too much steam coming out of your ears, a bit to be learned, never mind. You'll get there in the end. Continue. As I said before, bring a paper and pen, jot a couple of things down. Even then, you might think, I'm not quite sure what he meant by that. So it's not very good explaining that, Roger. Maybe I can Google it, like margin call, Google it, and things like that. And make sure, or go to your lesson. I presume, I didn't study the SMC thing, but I presume it's there on the LMS. Look it up there. But these bullet points I go on about are going on for a reason, because they're important. Okay. And I'm not exaggerating. I reckon that as much as maybe 90%, certainly over 80% of people screw up for two reasons. They've let the emotions controlling them, and they got the volumes, position sizing all up to maggots. They're not budgeting properly, basically. And that's why I have a calculator and understand the risk reward. Another one is, well, take the profits too quickly. Rather run with the profits. I know it sounds annoying, maybe it goes up and down all the time, but give the trade a chance. A lot of guys are already out of the Dow or whatever, now they're fed up about it because they should have stayed on board. Now the ship sailed and they took out 20 pip profit, when now they'd be up 270 pip profit. You see what I mean? Or they try and chase it. I mean, there's one person, I couldn't believe how they're doing it. They get, let's say the trade signal gives you get in there, and they do. It goes up. What they do, they get out, and then they get in again. Get out, get in again. What's the purpose of that? So the third one, they're buying near the top. Why would you do that? You get in, you get your stop down, your TP up here, and if it goes your direction, you modify your stop. Keep a distance between the two, so it eventually stops out, hits your TP. Or if it's really doing well, you can modify your TP. Remember, you can cap your position as well. You don't have to close your entire position. I hope you all know how to do that. If you've got 1 micro, clearly that's the minimum. But if you've got more than 1 micro, you can close part of your position. If you've got 5, you can close 3. Let's show how to do that quickly. Don't look at my reds. I hope they're going to come right. Some are reds and blues or whatever. This one's giving me a lot of hassle, but don't worry about it. I've got it under control. It's all looking pretty ugly at the moment. This is the only one. The Dow's looking okay, but hopefully they'll come right. Okay. Now I've got, as you see, 0.05. Look at the size of that. And I've got what a reasonable size account. Certainly not more than 50. I'm telling you right now. But look at that. I've not got 1.0 massive position size. And look, they're different depending where the stop is and the volatility. That's 4 times the size of that. You get the idea. So make sure you get your volumes correct. Now I'm doing very well, and it's getting down to the TP of 34,000. But hang on, it's doing that well. I've already modified my stop. Have I done that yet? No, it's not modified. Let's do it right now. I'm going to modify it to what's the price now? 200 pips. What is the price now? Where's it at? 3.4. Make it 3.43. 3.43.50. Now, right, I've modified my stop. So now basically I can't lose on that trade. I won't make much money, but at least I won't lose on it because it's slightly better than the better than entry. Now it's getting really near to 34,000. There's it now. So I'll get my example up for you there. It's getting next to 34,000, this area here. But it's still looking pretty good, but you're a bit nervous. Instead of closing your tower one, you can bring your stop down fairly close. This case maybe 100 pips away instead of 200. And then maybe close part of it. Let's say you can close 3 micros, let the other 2 run. So how do you do it? You double click and you put in the amount you want to close. So let's say you want to close 3. Put in 0.03 and then you click the close button. What happens then? Clearly this amount will be reduced and that will be reduced to 0.02. And you're still in the trade. You bank some. If you get stopped out 100 pips above that, well, you bank 3 at this price, and the other 2 will be banked at slightly less, you're okay. But you're still on board if it doesn't bounce up and it continues down. Anybody not understand that? Are we all good with that? A few tricks to trade. That's why we try and teach in the trading room. Stick with us and you'll know more than a lot of the guys out there have been trading for months and months and months and not getting so many little bits and pieces here. Everyone understand that?
Yes, sir.
I know you didn't find him, so about all the others. And we all got that. Good. Okay, so there we are. So you can cut your position, modify it, range to skin a cat. And don't stare at the thing all the time. You got your stop loss protecting. If you get stopped out, so be it. It happens. Okay. This might turn around and be blue. I don't think it happens. So forget it. You all got it now. Good stuff. So I don't like staring at it. Okay. We can do it on a loss if you want. Do a loss with pleasure. Why wouldn't do an in-pay, you think? Of course you can. Let's do it again. Where is it again? I'm doing a loss. Let's say I've got my strategy. Where's the stop loss? It got pretty close. We've got about 10 pips away earlier on, but it seems maybe coming right for now. So I'll fight. I'm going to hold fine. But if you're getting nervous or it's looking bad or you need some more capital, you can't put more money in your account because you haven't got it. You want to release more margin. You can certainly do that and go do the same thing. I'm going to close half of that. So I've got 0.2. I'll put in 0.1. And I click on that button there. And that obviously I've lost, I call that £2,000. I've lost £1,000. That'll change into 1,000 and that'll change to 0.1. So if you can do that, absolutely. But I'm going to stick with strategy and hope it comes right. If it doesn't, well, pretty, so be it, yeah. Of course, you take the loss, no ways around that. No such thing as a no-brainer getting away with something for nothing. Really, I must get this concept. If you're down £2,000, you close half of it, you're now down £1,000, and that £1,000 will obviously come off your balance. Yeah, for sure. If you in a position you want to add to it, of course you can. Just open another trade. You went into the Dow. Okay, let's say you went into the Dow by mistake. You meant to go with 0.1 and you put in 0.01 by mistake. So you got on the 0.1 and you meant 0.1. Well, all you do is open another order up. And then people go and put 0.1. No, you don't. You put the difference in. So if you're in 0.01 and you want to do 0.1, you put in 0.09 to make it up by adding a new order. Does that make sense? So if you got 5 and you wanted to do 10, open another order for 5 more. Then you got 10 in total, if you want to do that. That's exactly my point, Medwin. Don't get it too close. And there are going to be times when you're getting stopped out. All right, you've either broken even and made a few bucks. But the problem is you stopped out, and then it moved your direction, goes on to hit target. But if you don't do that and you leave it where it is, you could have a situation the winner can turn to a loser. So it's not an exact science. You got to think, yeah, I like to modify just because I don't want to turn a winner to a loser. But I still have to keep a bit of distance. But that's your choice. Okay. But I mean, if I left my stop loss at 30 or 650, where it was, and that thing goes up and stops me out, that's nearly 300 pips in profit to a 200 pip loss. That's a 500 pip turnaround, not a clever thing to do. So yeah, that's why I modified just now. Okay. But don't modify it away. That's what a lot of people do as well. They don't want to take the loss. So what they do is the stop loss here, going long on this one for argument's sake. You see the stop loss there, so they move it away, so they don't want to take the loss. And it continues down. So they did the calculator and said they're willing to risk 500 Rand on that trade. Now it's gone to 600 and 700 Rand. Now they're overexposed, then the margin, whatever. And the reason why they did it, because they can't take the loss, or the last time they did it, it did bounce and turn a profit. So they returned the profit last time, it'll do it next time. So somebody can completely remove the stop loss, then they're completely without protection. You can do that if you like. Break the speeding rules. You can break those stuff if you like, as long as you know you're breaking the rules. If you don't know, that's the problem. But once you know it, you know, you've got to know the law to break the law, sort of thing. But yeah, always remember, it's not an exact science. If you get a bit better at it, you're going to take the odd loss or whatever, you're comfortable, you mentally can handle it, and you know, should do better than you should. The signals have, I'm telling you right now, the signals over the last, I don't know, years, 6 months or whatever, have been a lot more winners than losers. The guys, unfortunately, take the profit too quick, going into getting margin called and all these sort of things, or not quite getting to TP, leaving the stop where it is, and something goes wrong, or a fundamental comes out, and then 90% of the way to the TP, bang off it comes and stops them out in the loss. You know what I mean? Now, the guys who tend to trading room here would have been already stopped out in a profit on that trade. The guy who hasn't traded the trade, who doesn't understand, will have taken a loss on that one, which is a bit of a pity. Do you understand what I'm saying? That's why you need to learn a skill. That's why you get this. Want to have money, you've got to learn the skills. And that's why stick with it. And if after 6 months of doing this every day and you still don't understand the calculator, then you've got to be honest with yourself, say, is this for you? You know what I mean? if you're doing 150 driving lessons and you still can't pass your test, you maybe think maybe driving's not for me. Yeah, idea. Okay, it's just after 11 o'clock, guys. Hope you found some benefit in that. Hope you found enough to say, look, it's still coming off nicely. I think we get some noise at 100, we'll see. But the bottom line, hope we're getting to understand a bit more, take notes, and it'll start to get a lot clearer with practice down the line. Okay, I know it's confusing at first. Any questions? Are we good? Okay, Nikki, great stuff. Thanks for your contribution. Brilliant. Some of you guys, don't panic. You'll get there. All good. Fantastico, guys. Okay, catch you guys tomorrow morning on those who can make it at 2 o'clock on top of it. Good stuff. Cheers, Ivan. Cheers, guys. Pleasure.